the Vice Chairman of Bank of America-Merrill Lynch. Tom Petrie has more than 30 years' experience in the oil industry, and he joins me now to assess the Middle East situation, really. If I may begin by talking to you about the unrest and the effect that that is having on, A, the amount of oil that's produced, and B, the price of oil. I mean, it does seem that without an end to this, it is going to continue to affect oil prices.
It will, but when we see signs that it's going well, a little bit of pressure comes in. And so that's a real sign that if it works out that the rebels get back into a position of control, we may have seen the highs. If it unravels, obviously it could be a different outcome.
Now, we're seeing what's happening in Libya on almost an hour-by-hour basis, but there is also concern about unrest in Yemen, what's happening in Syria, and indeed a knock-on to Saudi Arabia. I know were in Saudi Arabia very recently. Do you think that that is an area that is not going to, in the end, be affected in terms of oil production?
The Saudis have been more on top of it and understand job creation and not having unrest in terms of the basic social needs of their people.
They've got deep pockets as well to be able to
boost
living standards.
And the king is very popular. King has been very attuned to the issues.
Now, what you were also looking at overall when you were there was the idea of how much oil demand are we going to need? One of those very, very big picture questions. And you came up with the idea that we actually do need more oil going forward, which is a very interesting concept because we're supposed to be using less oil in the West, aren't we?
Right. Well, the issue we have is in the developed countries, demand is actually shrinking a little bit. But in the emerging countries, it's growing so rapidly that if you look out over the next 4 years, take us to the middle of this decade, we're going to be pressuring the world producing system unless we see the challenge in the Middle East settle down and Iraq can increase its production, Saudi Arabia can further increase. Otherwise, we're going to test the limits of the production system.
Wow. You mentioned Iraq there. There are huge oil reserves in Iraq, aren't there? Are they being tapped successfully at the moment?
There are. We know it's underdeveloped because it's had such a challenging history the last 2 decades. We don't really know how big it is, but we know it's probably somewhat short of Saudi Arabia, but maybe bigger than Iran. And that's big enough considering that they're only producing about 2.7 million barrels today. There's a real path that they could get to 4, 6, 8 million barrels a day.
And where is the investment coming into Iraq from? It's not just the US, there's a lot of Chinese investment there as well.
There is. There's actually only one US company. ExxonMobil is among the 11 companies that have come in recently. The host of others include Chinese companies, Russian companies, Australian, other European companies. There's a good diversity, and that may be a plus relative to how it unfolds from here.
But overall, oil production needs to increase. At what rate does it need to increase to meet global demand?
It probably needs to increase something close to 5% per year, certainly for the next 5 years. And that just keeps us barely ahead of the demand growth.
And is that something that we'll be comfortable being able to do? What needs to be done in terms of investment to reach those targets? Well,
there are large infrastructure investments that need to be made in Iraq. Iraq has been starved of normal development, so there's a lot of makeup to be done. They've been working on that since the war is over, but that's the critical thing that has to be done.
And who's going to provide the money for that seed investment?
Well, there is a structure to the deals that have been done with the companies. The companies will bring in the money, and more importantly, they bring the intellectual capital as well to work with the Iraq National Oil Company and bring it on stream.
So actually, the stability in the Middle East that we're seeing, or the instability that we're seeing now, could actually be crucial further ahead, because of course all those resources and for the infrastructure need to be put in place now if we're to keep up with global demand.
That's exactly right. And so seeing the contagion spread as much as it has is a source of concern, but there are certain critical countries and some others that aren't quite as critical. The issues in Bahrain are important right now for that reason.
And what do you think of what's happening in Bahrain? Again, is that something that's contained? And if it isn't, does the spillover affect global production?
Well, I think that there's a good chance that this declaration of an emergency and the powers that have been taken will settle it down some. But each of these are related. Each country has its own personality. It's surprising to me, and I think to many, that Syria's seen the serious uprising that they have had. It was considered one of the most controlled regimes in the Middle East. It's pretty clear this is not Iranian-inspired, in contrast to, say, Bahrain. And so there's a certain spontaneity to it there that may be perversely positive.
Now, of course, this does make us turn our attention to Russia perhaps a little more, and opportunities to invest there. What kind of potential investment does Russia have in terms of oil?
Russia has a large resource potential still, gas and oil. The oil tends to be more difficult, more capital intensive in some of the more remote areas. But there's been a change in attitude on the part of the Russians wanting more investment now as they recognize some of the technological challenges they have. So I think there is a role for Russia, and I think there's more interest in Russia than there was even 2 or 3 years ago.
Now, making headlines over here, of course, has been the BP Rosneft deal.
Yes.
What is the end game there? What's going on with
It's
that?
hard to tell. There's such a history between TNK BP and BP. Certainly, the public statements would suggest that the partners are really not interested in a financial settlement. There are those who doubt that statement, but that's one of the possible end games. It's not clear that TNK BP brings a lot to the joint venture, so including them is probably difficult. In most deals in Russia, in the end, the government kind of dictates or states what they want to see as the outcome.
And the Kremlin has weighed in already, hasn't it?
To a degree, but they've also admonished both sides.
Okay.
Don't put all of this on us.
Okay. Now, I wanted to ask you about what happened in Japan, the nuclear accident there, and what effect that has on oil and gas production. Do people look at that and think, actually, we're going to need more oil and gas, we're not so sure about nuclear? Does it have an impact?
Well, in the near term, we actually need less. Tanker rates from Saudi to Japan are down, and about a third of the refining capacity of Japan went offline because of the tsunami, the earthquake and the tsunami effects. So in the very near term, we need less. As they start to rebuild, there will be more demand, especially for diesel. And so I think that'll change probably 2 or 3 months from now. But in the very near term, it's been such a devastating impact that it's actually curtailed demand.
And one last question. When you talk about oil demand perhaps not being able to keep up with the supply that we have, what happens in 5 years if we just do not have enough supply? Actually,
it's a pretty simple answer. Price is the ultimate rationing agent. And if we don't keep up with the growth in demand, this emerging market growth, then we end up with higher prices. We gravitate to 120, 140, maybe 150, $150 a barrel.
Okay. Thank you very much indeed for coming in and sharing all that with us today. Thank you.
Pleasure.